The Bank of Canada's Tiff Macklem says he and his colleagues are determined to get inflation down to their 2% target. Speaking in Montreal, Macklem noted that underlying inflation continues to ease gradually, but he warned that global rates are unlikely to return to pre-pandemic levels. He also highlighted that, he says, a monetary policy is working.
It increased our confidence that inflation's coming down. It increased our confidence that we're going to move closer to that 2% target. There are lots of uncertainties. It's not a done deal, but with that increased confidence, our assessment was monetary policy no longer needed to be as restrictive as it has been.
Tiff Macklem, the governor of the Bank of Canada. OK, there's Canadian Western Bank surging today, up almost 70%. It has struck an old stock deal to be acquired by National Bank of Canada. But of course, the government, federal government, has to approve it, and so do 2/3 of CWB shareholders. Our guest says, sure, there are regulatory hurdles, but there's a 75% chance this deal will close as soon as October. Let's bring in Julian Klymochko, Chief Executive Officer at Accelerate, for more. I want to make sure, do I have that right? October of this year or next year, Julian?
That's 2025,
Sorry.
October, so almost 500 days away, Andy.
Okay, things move slowly, yeah. But you think the federal government, for example, will wave this thing through, maybe with conditions?
Yeah, I believe so. Luckily, we have a recent precedent in terms of RBC, the country's #1 bank, acquiring HSBC Canada, the #7 bank, for $13.5 billion. Now, this National Bank and Canadian Western Bank transaction represents the #6 acquiring the #8 for $5 billion. So it's a bit more bite-sized. Plus, there's less overlap. Obviously, National Bank heavily focused on Quebec and Eastern Canada, and CWB having a large presence in the West, Alberta and British Columbia specifically. So we think this deal will be completed. It'll take a while. We're penciling in next October 2025, in line with that RBC HSBC precedent, and in line with the company's guidance of by the end of 2025. That being said, in the meantime, probably going to be exposed to some headline risk there, particularly maybe with the election coming up. We'll see if politicians start yapping about it.
Yeah, that was Stephen Boland. Raymond James joined us earlier. He said in Alberta, perhaps people will seek to make hay with that particular one. I was surprised. The numbers with Canadian Western Bank, a couple of things surprised me. They've only got about 39 branches, so that's pretty tiny, but they will boost National Bank's commercial banking portfolio by about 50%. So that's not a bad pop.
Yeah, no doubt. So they've it's going to help diversify the business lines pretty significantly, have less of a focus on personal banking and more so those corporate lending relationships, equipment financing, and the like. So getting some product diversification for National Bank, and obviously that geographic diversification as well.
What about National Bank? Is there a risk they're overpaying here, valuing Canadian Western at a 40% premium to book?
Yeah, that's a really good point, Andy. So there's a couple dynamics there. So this is a highly complementary deal, and strategically it makes sense. There are some pretty significant synergies. They forecast $270 million of synergies. So it is accretive, just given those synergies and National Bank's premium valuation versus Canadian Western Bank. So you mentioned the valuation, roughly 14 times earnings, and that's only 9.1 times after synergies, and about 1.43 times tangible book value, which isn't bad. However, you look at the premium, 110%, which, to put into some context, is the largest premium on a multi-billion-dollar Canadian M&A deal since Repsol's acquisition of Talisman back in 2014. So that 110% premium is pretty jaw-dropping. However, the other metrics tend to make sense in the grand scheme of things.
I've just been trying to do some back-of-the-envelope calculations, and I'm always wary of doing that. But we had National Bank trading at around $109.50 today, and they're offering 0.45 of one of their shares. So that you would think would mean that the Canadian Western Bank shareholders get about $49. But the stock, Canadian Western, trading at less than 42. It sounds like a big gap, $7 or so. Am I missing something here?
No, you're not missing anything, Andy. That's what we call merger arbitrage. And so it creates an opportunity for investors to buy CWB stock and short sell National Bank stock to the share consideration 0.45 shares. And that spread, it's approximately 15% annualized, and it represents the deal risk. So currently, if you look at the upside potential, you mentioned the gap between 42 and 49, and you compare that to the potential downside, which is several multiples of that. That implies that the market says there's roughly a 75% chance that this deal is going to close as currently structured. In my opinion, it should be higher than that. So it could be an attractive merger arbitrage opportunity to capitalize on that share differential and earn that profit between where it's trading and where the consideration is valued at.
That's interesting. But of course, as so often happens in Canada, well, I guess it happens in America too with these mergers, we're going to have to wait till October of next year before the thing closes?
Yeah, hopefully, and hopefully it doesn't drag on a bit longer, as we've seen historically. If you look at certain deals like Shaw Rogers and the like, those tend to get extended. Hopefully that doesn't happen here, but it's to be seen.
What, do you get the impression that there'll be pushback from the small and medium enterprises? We have a guest coming up who has concerns about that, who says they're already ill-served by the Canadian banks.
Yeah, there's always going to be some concerns with respect to consolidation, particularly in the oligopoly that is the Canadian banking sector, albeit I don't think this is the deal to get concerned about. Where the market power lies is really in the big five, and this just strengthens national banks' hand against competing with RBC and CIBC and those types of players. So I think you shouldn't be too concerned about this merger. Like I said, it's number 6 and number 8 merging, and hopefully they can take it to the large 5 Canadian banks and make them a bit more competitive.